Hello everybody and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group. It is Saturday the 5th of February and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 7, season 8 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed. So, Phil, it is February.
Yes.
It's the first week of February.
Yeah, who knew? Yeah, it takes
a
you
quick
a bit by
reality
surprise,
check. Yeah, quick reality check there.
It does. I mean, how quickly is it going? I mean, it's, I'm sure there's people thinking, it can't be really February already, but it is. It's the 5th of February as you're listening this morning to us. So we have got some shout outs this week though, haven't we, Curtis? Because we've had 2 fantastic interviews with the guests in the recent weeks.
Yes, which you can find both these interviews as self-contained episodes on your podcast feed. We spoke to Steve Young, who is the boss of ICDP and all-round industry guru, really. And Steve was talking to us about the current after-sales trends and also his forecast for the immediate and long-term future. So there were some interesting patterns that he was picking up and identifying and talking about for both franchised and independent workshops.
Definitely. And again, Darren Martin, as he does join us on a monthly basis, he shared his views on the January used car pricing market and trends that he'd observed in the month of January. But more importantly, if you haven't listened to it, it's worth a listen because he does share his views on what to expect over the sort of coming weeks and months, that there is no crash on the horizon anytime soon. So, he's talking about a stability of the marketplace rather than a crash of the marketplace.
Yeah, most definitely, and definitely worth listening out for that. And it is part of our regular monthly catch-ups with Darren at the end of the month, with him talking about the preceding month. So if you'd like to get in touch with us at all, then do send us a press release or come on the show, then email us at motortraderadio@yahoo.com. You can join our LinkedIn group or follow us on Twitter. We're easy to find, either Motor Trade Radio or Phil or myself.
Definitely. And coming up in this show, we have got Steve Whitton back, where he's sharing his latest Men Able moment on mental health and well-being in the motor trade. So he gives a little bit of an update of his feelings at the minute, and he's done a bit of research across the sector in terms of recruitment and staffing levels in general.
Yeah, definitely listen out for that. That'll be after the halfway point. So headlines this week, we have the new and used trends for January. The new car registrations are out, so we'll talk through those. We have a forecast from Cox Automotive on how the new car market is likely to pan out in 2022. An update on Constellation's latest move in the franchise dealer sector. Also, Volvo are offering free puncture repairs, so we'll look at what's behind that. And finally this week is an interesting story about the latest trends that are being noticed in EV MOTs and how they compare with ICE cars and what the failure rates are.
Definitely. So do tune for that, because I think that interestingly we talked about Steve Young from ICDP, who was talking about the after sales marketplace, and there is this thing around EV, and he does mention sort of EV and the impact of electric vehicles on after sales. So quite an interesting one there at the end, the story we've got around the MOTs of electric vehicles. But we're going to head over first to AM Online, and as Curtis has said there, this is a story from eBay Motors Group, who power this podcast that you're listening to this morning, and this is about used car market stabilisers in January. So this is where eBay Motors are sharing the insight in their monthly market view of the sector around stocking levels, stock prices and things like that. So some interesting, fascinating findings in this one again, Curtis.
Yeah, as ever, and the full market review is available on the eBay Motors Group website. So do head over there if you want to take a deeper dive into these figures. But Well, the overview from eBay Motors Group is that dealers experienced an encouraging start to the year on the back of stable stock levels and stable advertised prices, although cars did take a little longer to sell. So, faced with the ongoing shortage of used car stock that we talk about on a regular basis, dealers entered January with inventories averaging 46.7 vehicles. So that was very much on a par with December, where it was 47.1, but 10% down year on year. And if we look at stock levels, that they were consistent across the three main retailing channels, with car supermarkets seeing a slight improvement from 351 to 354 units, although down 6.5% from 379 in January last year. Franchise dealers, they averaged 61 units, and that was just one vehicle down month on month and year on year. Independents, meanwhile, averaged 33 units, so that was the same as December, although 13.4% down year on year. But following significant gains achieved during the second half of 2021, advertised prices actually levelled off for the third consecutive month, with those averages at £17,863. So that was just up marginally, 0.8% on December, but a year-on-year increase of 17.8%.
Yeah, and interestingly, I mean, we say we've got a story at the end about electric vehicles in the sort of MOT sector, but I think looking at the stats on the fuel volume levels within the dealer market, the stock volume levels, and very little movement there, Curtis, on electric and hybrid. I mean, all right, still dominating the used vehicle retail of petrol and diesel, with diesel being dominant at 43.3% of the stock, and petrol being at 53.2%. Marginal movements year on year and since last month. But you look at hybrid's still at only 2.6% compared to 2.5% in December and 2.5% last year. So very little, if any, movement there around hybrid. And interestingly, electric, they were 1% share this time last year, down to 0.8% in December and only 0.9% in January of this year. So very little movement yet in that alternative fuel sector on dealers' forecasts, according to eBay Motors.
Yeah, and I think this is going to be an interesting one to watch on a monthly basis, because those figures will start to creep up as more vehicles come into the used car market. And again, we'll pick up on that in the MOT story. Another point in this story is that average days to sell, they did increase slightly month on month from 39.4 to 45.5 days on average. So that was a rise of 15%. But the interesting point here, it was an improvement on the 51.2 days average in January 2021, when, of course, we were in the COVID lockdown.
Yeah, and I mean, there's lots and lots of insight in the market view from eBay Motors Group. So we do urge anybody that is listening this morning to get a copy of that market view on eBay Motors Group website there. That, because they're talking about the most viewed manufacturers, the fastest selling makes and models, which BMW 1 Series there at the top in the age band in between 6 and 8 years. They're followed by the VW Golf, Vauxhall Corsa. Still there in the top 5 there, Curtis, and they're followed by the Ford Fiesta, and then the Vauxhall Vivaro actually there in 5th position, but that's for an age band of less than 6 months. So some interesting stats there from eBay.
Yeah, and just to finish off on that particular story, I was talking about those average days to sell. It's worth pointing out that so the average for the month was 45.5 days. So that was a month-on-month increase, as I mentioned, but it's actually starting to track the pre-COVID levels. So if we go back to January 2019 and 2020, if you can remember back that
It's a
far,
long
Phil.
time ago. Yeah.
It is, yeah. The average was 44 days, so it's moved from 44 to 45.5. So again, it's one of those interesting markers that we'll keep an eye on, certainly next month and over the coming months.
Definitely. And what we have been waiting for is, how January has performed in terms of new vehicle market. We've continually talked about the shortage of vehicles hitting the sector, be it through semiconductor or raw materials in general. And heading over to Car Dealer for this story, and the new car results are out this week, and new car registrations in January has increased year on year, more than 27%, but obviously headwinds are still constraining the recovery. So, we have seen that increase year on year, but obviously it's still down compared to pre-pandemic levels, isn't it, Curtis?
It is indeed, yeah. So for January, 115,087 new cars were registered. So as you say, that was 27.5% up on January last year when, again, we were in lockdown. So, the showrooms were actually shut, although they were trading online. Some of the stats pointed out by the SMMT are quite revealing. 1 in 5 buyers went electric. And analysis reveals average new car CO2s reached a record low, so that they were CO2 emissions were actually down 11.2%. As that model mix starts to change.
Yeah, so I think clearly we're still seeing a challenge of supply. We've got, like you say, that figure is down year on year. But it is obviously a predicament that new vehicle supply is still constrained. But again, this shift towards electric is still continuing, isn't it?
It is indeed, yeah. And it's also worth just pointing out, in terms of sales for the month, private accounted for 54.1%. So it was actually up 64.1% year on year. Fleets was marginally down year on year, 0.4%, taking a 44.2% stake. And business sales, so that's for businesses running less than 25 vehicles, that was up 52.1%, taking a 1.7% market share. So the market was very much driven by retail demand.
Yeah, and again, in the Car Dealer story, there's a few comments from commentators across the sector that are worth having a quick look at, because again, it's taking their view on where they're seeing the sector head. And you've got Jim Holder there, who is obviously the editorial director there from What Car, that talks about that 2022 outlook remains precarious. So again, reviewing that supply is probably more dominated towards the second half of the year. You've got KPMG talking about demand remains robust for now. So, we've still got reasonable good demand considering the supply. You've got Alex Buttle there from who's the co-founder at Motorway, talking about the recovery will be down to the manufacturers. So again, which manufacturers can get material and get supply into the marketplace. So again, worth heading over there to have a quick look at the story there from Car Dealer.
Yeah, I was also fascinated to see the top sellers for the month, because as we were saying, only last month, you expect to see Ford at number one, and they're dropping down and down the rankings. So the best-selling car of January was the Kia Sportage. Yeah. So amazing, really. Kia had 2 models in the top 3, the Kia Niro at number 3 and the Ford Puma at number 2. So no sign of the Fiesta. The Fiesta has dropped out of the top 10.
And just to give you context in terms of what's happening in some of the European markets, that again, it's not just the UK. There are challenges facing right across the supply in the international and European markets. Germany, 184,000 registrations, but that was down from 228,000 in December. But they were actually 30.7% down compared to January of 2019. So again, very significant drop on volume for Germany compared to pre-pandemic. France, down in both compared to last year and 2019. So they were down 18.6% year on year and down 33.6% compared to 2019 pre-pandemic. Italy down 19.6% year on year to 108,000 and down 34.8% on pre-pandemic levels. And Spain, although really reasonable recovery, up 1% compared to what they performed in January of last year, but they only did 42,000 registrations, so they really did suffer in January of last year, but down 54.7% on pre-pandemic levels. So to put that in context, Spain did 42,000 registrations in January of this year, but they actually did 86,000, so less than half compared to what they did in December, with 86,000 registrations. So again, still hitting the European markets very heavily. So I think all in all, the UK didn't do too bad compared to our counterparts in Europe.
Yeah, and if we take a look at the van sales for January, they are sort of mirror opposites of how cars did, which is interesting development here. So new van sales, the market was down 26.9% in January to 17,500 units. But it's worth pointing out that you're not really comparing, well, as indeed we never are month or year on year, never comparing like for like, because January last year was actually a bumper January for the market. So the word from the SMMT is that despite it being a slow start to the year for the van market, Mike Hawes, chief exec, is pretty confident that the van market is expected to post another strong year. So it's been a slow start, but let's see how that market picks up and gathers a bit of momentum. And staying with all things new, if we head over to AM, they've got a story headlined: new car registrations will rise by 14% in 2022, and this is actually based on some forecasting that you've done at Cox Automotive.
Yeah, I mean, we do obviously do regular forecasting for the new and used volume marketplace. So again, we've just produced the Auto Focus, which is the fourth issue of Auto Focus, which is our quarterly report. We have actually got Steve Young in there this month from ICDP, Tom Callow in there from BP Pulse, and we do need to get Tom on the podcast and share his views of what's happening from a BP Pulse perspective. We've got Owen Edwards, a friend of the show from Grant Thornton in there. But within the report, we are forecasting the new and used marketplace, both for the first and second quarter, but also for the full year. And as you point out there, Curtis, we're looking at the new car market. So, we are forecasting that, if we do get supply and we start to see supply come into the market earlier than many are expecting, I think with the best case scenario that we'll do just over 2 million new car registrations this year. That would equate to a 26.9% increase on last year's performance, and marginally down. I mean, 9.5% down on pre-pandemic levels, I think would be a real result if we get up to that 2 million marketplace. But we do believe that the most likely scenario is about a 1.8 million marketplace, which I think, all things considered, with what we've been through, the headwinds still faced in the sector that we've just been talking about on the back of the SMMT figures, that would result in a 14.1% increase year on year and put us 18.7% down against pre-pandemic levels of 2019. So again, all things, and that's more back-end weighted. So the view is that when we start to see supply coming into the sector, as the manufacturers look to try and recover their semiconductors and microchips and other raw materials, that it'll probably be back end of the year before we start to see signs of recovery. So it's very much, as many are saying, that this will be a year of two halves in the sector.
Yeah, and you're absolutely right there, Phil, because a lot of the talk is about those supply issues getting a bit better towards the back end of the year. Certainly the supply of semiconductors, which is hampering, still hampering supply at the moment.
I think the key with this, though, and I think, in putting all this in context, I think we may see some reasonable performances in March. There is some good order takes going forward, whatever manufacturer you're representing. But again, it's very much brand and manufacturer specific now. Some are doing better than others, some are getting material quicker than others. So I think there is green shoots starting to appear, but it is going to be very much brand specific as to where you'll see that. We saw Toyota, led the global market last year, but they had easy access to material. They had semiconductors, Kia, Hyundai, and other two manufacturers that had reasonable access to that electronics marketplace. So again, recovery is going to be down to manufacturer.
You heard it. you heard it first here on Motor Trade Radio. There you go.
There you go.
Yeah. So you're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. And now, here's friend of the podcast, Steve Whitton, with his latest Men-Able Moments, looking at fight, flight and freeze mode and how it links with a recent poll that he put out on LinkedIn asking businesses what's their biggest challenge, recruiting, training or retaining staff. So over to you, Steve.
Yeah, hi Phil, hi Curtis, and here we are with another Men-Able Moments. Hope everyone is well. We're in February already. Wow, how's that happened? I know that last time we talked about how time flies and to make the most of every day and all of that. And here we are in the beginning of February already. So I've got a couple of things to talk about a little bit today. One is from a very personal perspective and the other one is from a business angle. So on the personal front, I've got to be honest, I've been a little bit, not under the weather, I wouldn't say, but certainly very aware of my mind taking me into fight, flight or freeze mode of late. Pretty much everything's come to a head on a personal front, and which is good because that now means I can sort of draw a line and move on. But it does mean that my head has gone into a sort of freeze mode, if I'm honest. I've done all the fighting, done all the putting the energy into, everything that way, and also sort of considered the running away from the flight mode, and now gone into a bit of freeze of, oh my God, this is kind of scary and moving into a new chapter. Now, the reason I'm sharing that is because that really genuinely happens to all of us, and I see it all the time, and people who reach out to me, when they're talking, it's very evident that they're in one of those three modes, fight, flight or freeze. And if you saw my vlog that I did a few weeks ago where I talked about getting centered, about being on that emotional swing where you move, from one end to the other, it genuinely is something that affects all of us. So, have a think about what's going on in your life and just take a minute to stop and think, am I in fight, flight or freeze mode? To put that into a more physical sense in terms of our body and its physiology, I read something the other day that actually said that quite often, the head wants to do one thing and the heart wants to do something else. And of course, what's happening is our gut is actually, and there is some work going into working out that we do actually have a second brain and it's in the gut, believe it or not. I'm no medical person, as you know, so I won't go any further with that. But anyway, the point of that is that what's happening is our gut is trying to listen to our heart and our head. And if those two are not in alignment, then it's going to make you think, well, wow, what do I do? Do I run away from this? Do I fight it? Or do I freeze? And that fight, flight, freeze thing comes from our real kind of Neanderthal brain of protecting us in the event of danger. So, it's well worth listening to, well worth taking a moment to stop and think, what is actually going on for me? As always, reach out, have a chat about that if you want. Always happy to talk about that sort of stuff. And I'm starting to think I could have done a bloody PhD in all this stuff I'm reading and videos I'm watching. Anyway, from a business point of view, I put a poll out on LinkedIn last week asking the question, what is the biggest challenge of the following three that you as a business have in the current situation? Is it gaining staff? Is it training staff? Or is it retaining staff? And when the poll closed, the resounding result was that 65% of people said that retaining good staff was their biggest challenge. So from a business perspective, the question I've got for you is, in the nicest possible way, why is that? What's going on? What are you as a business doing to ensure that you retain good staff? Now, many would say, well, I'm losing technicians to the dealership or the garage up the road because they're offering an extra few pounds an hour, or stuff like that. Salespeople are great for having their head turned by a pretty badge or a little bit of a higher basic or a better car. I know, because that's where I was. So the question really is, what are you as a business doing to work on retaining the good people that you have? We know we've got a skills shortage and it's getting worse. As part of the Diversity and Inclusion Task Force with the IMI, that's one of the key things that's come out of that, is this massive issue that we have with skills shortage. We know that we also have a situation where we have a legacy of recruiting in our own likeness. And if there are more and more people from diverse areas of our community coming forward who don't look, act, or have the same experience as us, are we actually sort of closing a door to potentially employing them as well? And training, well, you'd expect me to say this as someone who's had a lifetime in training. I see all the time that there is a desperate need to train managers on emotional intelligence and empathy and compassion. So put all of that together, I really can't say I'm that surprised that the biggest challenge we've got on the face of it really is retaining good staff. So there's probably some work to be done. And I don't normally use these to do a bit of a sales pitch, but genuinely, if you do want a little bit of a VHC, let's call it that, on your business around all of that, then give us a shout. Because it could be that you have some of your team that themselves are in fight, flight, or freeze mode. And when they get to flight and they disappear, that's where you're then left with the problem of retaining good staff and getting new ones. So yeah, quite a bit to digest in there, I think. So hope that all resonates. And guys, thanks once again, and we will catch up soon. Take it easy. See you later. Bye.
Well, thought-provoking as ever.
As always, heart on sleeve there from Steve.
Yeah, very much so. And some hard questions there about staff retention.
Yeah, and I think one thing worth noting is this week, it is actually 7th to the 13th of February, is actually National Apprenticeship Week. For those that don't know, there's always something happening on a weekly basis or daily basis, but it is a National Apprenticeship Week this week. So again, get involved where you can. I think this is all about bringing people into the industry, and as Steve alluded to there, the work being done by IMI with Steve Nash and the other guys there. There's a lot of work being going on. Again, that retain and recruit, and some of it we need to get in, and that comes through apprenticeship, which is probably a longer term investment, but that's what we need to think about for the sector. So lots to think about, as always, there from Steve.
Yeah, most definitely. And if you do want to get in touch with Steve, probably the best place to find him is on LinkedIn, where he's under Stephen J. Whitton. That's Stephen with a PH. He's also on Twitter. So, do get in touch and, take it from there. So heading over to Car Dealer for our next story, and the headline is, there is Constellation's Lookers share swoop was a blocking move designed to keep others out. So this is Car Dealer's take on what happened last week when it was announced that Constellation had purchased 19.9% stake in Lookers. So it's worth heading over to the story to have a look, because what they say is industry experts believe that they call it a swoop on the 78 million shares which were purchased from former director Tony Bramwell, so that was Friday last week, were a way of Constellation actually ensuring that others don't move in. And it's an interesting take on the story here, because Lookers shares have been performing strongly, and they go on to quote Mike Allen, who is a friend of the podcast. He's the motor industry analyst at Zeus Capital, and he's saying that this is what his view would be, because he says, in our view, this is a shrewd move by Constellation to acquire a blocking stake in an undervalued business with exciting growth prospects. So it's really talking about long-term investment, and this of course is on the back of Constellation putting in a bid for Marshalls at the tail end of last year.
Over to AM now, and this is an interesting one, because you can set a personal story on this one, Curtis, that network targets Volvo owners with free puncher and windscreen chip fixes. So this is a move from Volvo Car in the UK, and I think you're a Volvo driver, aren't you? So you did receive this communication directly.
Yeah, I was rather pleased to open this email during the week. Volvo's actually claiming this as an industry first, and I think quite legitimately, because I can't think of anyone else who's doing it. So they've launched a free of charge repair service which covers windscreen chips and tyre repairs. So, and this doesn't just apply to owners of new Volvos. It's any Volvo driver. So no matter the age of the car, you can make a claim on this and take your car in for a tyre repair or a windscreen chip repair. And this is a great way to actually get Volvos back into Volvo workshops.
Yeah, and there is there's a comment here from Christian Elverfors, who is the UK Volvo managing director for Volvo Car UK, and he's a friend of the show, and we have had him on. I mean, it seems a long time ago when Christian was on, wasn't it? Now, but it is a long time ago. Right at the start of the pandemic, I think this was on, wasn't it, Curtis? Was it?
It was,
start?
Yeah. We spoke to him just after lockdown, and
when he was locked down himself. Yeah,
he was. Yes, yeah.
I remember that one. So I know you're a listener of the podcast, Christian. So we will invite you back on. It would be great to get an update of some of these moves that you're doing within Volvo. But there is a statement from Christian that says, as well as reducing the nuance factor of minor damage, this new service helps keep cars in safe condition, and in the case of the windscreens can prevent chips leading to cracks and more costly replacements. So this is it is whether you call it a small move by Volvo, it's a very smart move by Volvo, isn't it, to help their customers.
It is, yeah, and it does shine a light on an area of after sales that is often overlooked in the franchise sector, and that's tyre replacements. I mean, some dealers do it really, really well and do it very proactively, whereas others don't shout about it. So if you've got a car coming in because it needs repairing, it might need replacing. The tyres might need replacing. So it's a good opportunity to just talk to the owner and tell them what sort of states their tyres are in. And
a great way of keeping that communication between the customer and the dealer.
Yeah.
As well, keeping that within the network, keeping that relationship for the dealer with their customers. So a great move by Volvo there. So yeah, please do reach out, Christian, and it'll be great to have you back on and get some updates of what you've been on in the world of Volvo since lockdown. Now you've probably got a little bit more freedom to do things. So final story. So we've got an interesting story, this one, and remaining with after sales in terms of the aftermarket, but we are heading over to This Is Money, and the headline paragraph is electric cars are marginally more likely to pass an MOT test than petrol and diesel motors. These are the best and worst performing battery models. They don't make it easy, do they, Curtis? With
they don't. No. I mean, I think you've told the story. We might as well say goodbye.
Right, move on there. But I think again we mentioned it the other week that there's going to be something every single week around EV. We know the acceleration of EV, but more importantly now, talking about more what it means in terms of the used vehicle marketplace for after sales as well. So some interesting findings here in this report.
Yeah, I mean, the pass rates are fascinating. So this is based on data from 2020, and it shows the average MOT pass rate for an EV is 86.7%. But that's pretty close to petrol and diesel cars, because they averaged 84.5%. So this is all according to stats that have been looked at from the DFT, and it does shed a light on what will become an evolving sector, and we will start to see evolving trends here as more and more EVs tip into 3+ years and MOTs. But you would suspect, and we were talking about this beforehand, because there's fewer mechanical parts to go wrong on an EV, that they would be sailing through MOTs at a higher rate than they actually are. But the story goes on to show that the EVs that are coming in for MOTs are actually doing reasonably high mileage, so there is more wear and tear.
Yeah, and that's the interesting bit with this, and the normal sort of what you'd expect to see in the top 10s and top 5s around these kind of reports is very much different when we're looking at EVs, isn't it? I mean, you've got the Hyundai Ioniq there in number 1 position at a 98.8% pass rate, followed by the Nissan Leaf and the Volkswagen e-Golf. But Tesla there in 4th position, and that's with a Tesla X, not the earlier models with the S or or even the more recent 3. So obviously that's not quite at the MOT stage yet. But Tesla X there in 4th position with a 92.1% pass rate, and that's quickly followed by the BMW i3 at 91.8% pass rate. So I think as we move forward, there's going to be some interesting stats coming out around electric vehicles and that aftermarket as we start to see some of these volumes start to increase.
Yeah, and an interesting add-on to this story is that they've looked at some findings from the Motor Ombudsman about customer complaints around EVs, and it does identify certainly software glitches as being a major cause of complaint amongst customers, and over 2/3, so 67% of complaints were due to onboard systems. So while as we said before, fewer mechanical problems, there are more sort of technological problems with EVs that are emerging, and especially as these cars, as I said earlier, fall into the MOT 3+ year age band.
Yeah, and I think I've been watching some things this week, and when you start talking about electronics and all the connectivity and things like that on today's cars, the costs of repair do start to increase. I mean, somebody was talking this week about the headlights, the directional headlights. To replace those are in the thousands if they do go wrong, rather than your traditional headlight, which are in the sort of low hundreds, if that, to replace. So as we move through with these, better equipment on vehicles, it gets a little bit more costly, and as you're saying there, the failure rate is starting to be seen on some of these electric vehicles that do rely on a lot of technology.
Yeah, but potentially an opportunity for after-sales workshops.
Yeah, I think that was what Steve was talking about on the podcast, wasn't it, when we interviewed him as well? So it's not all doom and gloom. There is opportunities there in terms of that EV market in after sales. But again, a little bit more details there in the story itself. So again, Curtis, great headlines again this week, and fantastic interview there with update from Steve Whitton at Menable. Gives you some things to think about, as always, with Steve. And as we said throughout the podcast today, if you did miss the Darren Martin or the Steve Young interviews, they are still available. Do head over to your podcast feed, and they'll be available for you to listen to there. great interviews as always we'd expect from both Darren and Steve. And Darren, you know, is a monthly contributor now, and Steve will be now as well. So again, look forward to further interviews with them guys. And as always, suggest head over to the headlines that we've talked about today and other stories that will be breaking as we're recording this podcast. So, you know, whether that's AM, car dealer, motor trader, or any of the others, head over there and have a look at the stories in a little bit more detail that we've covered this week. But I think that's it this week, Curtis, isn't it?
That's all for this week. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chat that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.